Okay. So here's our pop quiz for the morning. You knew it was coming. Who is this gentleman? Anyone know who this is? Late 1400s, an Italian monk.
Euclid?
Want to guess?
Euclid?
No, that's a good guess, though. That's a good guess. Euclid, good guess. It may
Pythagorean?
be related.
Pythagorean?
No, again, very good guess. Francisco Pacioli. Francisco Pacioli, an Italian monk, late 1400s, is generally regarded as the father of modern day accounting. The father of modern day accounting. Think about that, late 1400s, not late 1900s, late 1400s, considered the father of modern day accounting. What does that suggest to you about what we're talking about today? Well, what it might suggest is this stuff has been around for centuries, what we're talking about today. And while certainly the tactics, the technology has changed, thankfully, we're not using the abacus anymore to do math. The technology has changed over time, but many of the strategy, the theories of accounting haven't changed much over 5 centuries. In addition, if you ever get really frustrated, if you ever get stressed about your accounting, blame the Italians. They came up with this stuff. Blame the Italians. All right. So before we look at the financial statements, it's important that we're able to differentiate between the 2 types of accounting. And you maybe have heard these terms before. You may even understand the difference between the 2. Cash accounting versus accrual-based accounting. Cash versus accrual. 2 types, 2 ways that we can set up our financial statements, either on a cash basis or on an accrual basis. Let's look at the difference. Cash basis accounting, sales occur when payment is received. So if I sell something to Laura and she hands me a check for $100, I now count that as a sale. I only count it as a sale when I have received payment, cash basis accounting. On the flip side, under cash basis accounting, expenses occur when payment is made. So if Laura sends me an order of flowers and I send her a check for those flowers, once I've written that check and sent it to her, that now becomes an expense on my income statement. Expenses occur when we make payment. Let's compare this to accrual-based accounting. Accrual-based accounting, sales are recognized when the revenue is earned. So if I provide a service to Laura's company and I've completed that service and I send her a bill, it shows up on her balance sheet as an account receivable, and it shows up on my income statement as revenue because I've performed the service, I just haven't gotten paid yet. Likewise, under accrual-based accounting, expenses are recognized when they are incurred. So if Laura sends me some flowers and I receive those flowers, it's going to show up as an expense on my income statement and an account payable on my balance sheet because I haven't paid her yet, but I've received the product. So under accrual-based accounting, expense on my income statement, account payable on my balance sheet. So what you notice, the difference between the 2 types of accounting is all about timing. Timing of when we account for sales, timing of when we account for expenses. Most, if not almost all small businesses use accrual-based accounting for measuring financial performance, like what we're doing today. It's the best form of accounting for measuring financial performance. About the only time that we use cash basis accounting is for tax purposes. So your accountant about now may ask you, okay, do you want to report your taxes based on cash or based on accrual? And in most cases, we do it on a cash basis because that allows us to delay or defer the paying of taxes on certain income. It just delays how much we owe the IRS if we use, in some cases, if we use cash basis accounting. But in terms of just looking at financial performance, I would strongly suggest that you use accrual based accounting because it's a more real-time picture of how your company's doing in terms of financial performance. In fact, the US is one of the few countries on the planet that still allows cash basis accounting. Almost every other country on the planet, you only have one choice, and it's accrual based accounting. But here in the US, for tax purposes, you can use cash basis accounting. If you're not sure which one to use or when to use, good conversation to have with your accountant, your CPA, your tax expert. Okay.